And our next guest recently spoke to Tesla CEO Elon Musk as part of a Spaces on X, hitting on topics ranging from self-driving cars to the dominance of passive investing. And this comes after she recently added Tesla shares to her benchmark fund for the first time in months. Of course, we're talking about Cathie Wood, Ark Invest founder, CEO, and CIO. And I definitely want to talk crypto with you, Cathie, but I did want to start with Tesla here because you did have the chance to talk to Elon Musk last week, and because you did recently add those Tesla shares back in. Although you didn't not have them, you just added more shares to the portfolio. Talk to me about the timing of that, first of all, of getting back out there and buying Tesla shares.
Yeah, a couple of things have happened in the last month, really, that have increased our confidence in Tesla. It's already high. It's the number 2 position in the flagship fund. But when we saw GM and Ford really pulling away from EVs until they become profitable, that was telltale for us in terms of share gains available to Tesla. What's puzzling is that GM and Ford are not going to be profitable with electric unless they scale.
Despite its notoriety, not everyone is persuaded by Tesla's tale. In fact, some people think that the company is greatly overvalued. Tesla is still one of the most innovative businesses of our day, leading the industry with its cutting-edge technology and ingenuity.
You've been bearish on Tesla for ever. I mean, I feel like it's been years that I've spoken to and you've been bearish on Tesla, and yet the stock has performed really well despite whatever you want to say about the fundamentals. Why are you still bearish here?
So I'm bearish because I see it as egregiously overvalued, right? We look at Toyota as a benchmark, right? Toyota is the world's largest auto producer, about 9 million cars a year. There's nothing Tesla has that Toyota does not. Why should it trade at a large multiple to Toyota? If it's going to sell a fraction of the vehicles, maybe the technology premium, the leadership in EVs, give it a similar valuation. And that's really what we do with our $85 price target. So I'm not celebrated, though. I do need to clarify that. There are levers that they can pull, specifically the mini car in India. We've been waiting for them on both of these really since 2019, back actually when we were last, I believe, really bullish on the stock. But from here, I see this one as a slow drip over the next couple of years.
Okay. So I guess what do you make then of the reports then today about a revamp of its most popular model in one of its largest markets, where I guess from which its factory sends out and exports the most EVs to different parts of the world?
Yeah, no, the Shanghai facility is the most important facility for Tesla. So it's necessary. All of their models are long in the tooth. People have been asking for updates of the S, the X, the 3 for years, and the Y, is losing market share in China. It's no longer the leading EV in China, so I think it's overdue, right? Some of these other updates are many years overdue. Everybody was looking forward to a new Roadster. Everybody's looking forward to the Cybertruck. Finally, we got a couple, right? They're late. Competition's real. Competition in China is overtaking them, and it's going to be a tough 2024 for Tesla.
We quickly examine Cathie Wood's theory that Tesla will take over the auto industry and why she believes it to be the most innovative and disruptive company in the world today. Cathie Wood is the CEO and founder of Ark Invest, a company that focuses on disruptive innovation and management, and she oversees a number of exchange-traded funds that contain shares of Tesla. In this video, we'll find out why Cathie Wood is so bullish on Tesla and how she believes the automaker will dominate the market. The investment expert has repeatedly expressed her confidence in Tesla's growth potential despite the difficulties and volatility the company faces in the short term. She has also remained a huge fan of the car company and plans to buy more Tesla shares in the future. Let's get started.
And I definitely want to talk crypto with you, Cathie, but I did want to start with Tesla here because you did have the chance to talk to Elon Musk last week, and because you did recently add those Tesla shares back in. Although you didn't not have them, you just added more shares to the portfolio. Talk to me about the timing of that, first of all, of getting back out there and buying Tesla shares.
Yeah, a couple of things have happened in the last month, really, that have increased our confidence in Tesla. It's already high. It's the number 2 position in the flagship fund. But when we saw GM and Ford really pulling away from EVs until they become profitable, that was telltale for us in terms of share gains available to Tesla. What's puzzling is that GM and Ford are not going to be profitable with electric unless they scale. And so it's a bit of a puzzling decision. And the other thing, of course, GM has basically shut down Cruise, partly for regulatory reasons, partly out of an abundance of caution on the autonomous side. And, they're losing a lot of talent because of it. And again, we do believe that Tesla is in the pole position to be the autonomous taxi platform in the United States. Cruise pulling out adds to our confidence there as well.
Cathie, I'm curious what your current thinking is on the timeline of when Tesla is going to be able to get there. I mean, this is something that is difficult, we have seen, not just for Tesla, but other companies. Tesla tends to push timelines back. So when do you think that is going to arrive and therefore, I would assume, unlock more value for the shares as well?
Yes. We're seeing some data here that I think is compelling. If you look at a Tesla, and this is based on Tasha Keeney's work, one of our analysts on Tesla, if you look at the number of miles between accidents in a Tesla with full self-driving, it's roughly 3.2 million miles. If you look at a Tesla without full self-driving and do the same analysis, it's 1 every 600,000 miles. So a Tesla with FSD is 5 times safer than a Tesla without, and 6 times safer than the average car on the road, which I guess is in an accident. This is on surface streets. It's actually more than 6 times. Is the average car on surface streets is in an accident once every roughly 200,000 miles. So pretty astonishing safety metrics. And on Spaces, when we were speaking to Elon Musk, I was asking him about NHTSA. NHTSA is the National Highway Transportation Safety Administration, and just how he felt the NHTSA was going to use this data. Was it important to NHTSA? And he said, absolutely. It's a data-driven organization. So we think that the numbers are compelling. And you know that 80 to 90% of all accidents are caused by human error. So taking the human out actually does make a difference.
Wood's strategy and investment choices demonstrate her strong belief in Tesla. She has continuously increased her holdings of the company's stock whenever its price has declined and has kept a sizable amount of Tesla-related ETFs. As of December 2023, Cathie Wood had defended Tesla against detractors and skeptics and had had direct discussions with Musk on a number of channels, including podcasts and X Spaces. In her flagship fund, the Ark Innovation ETF, or ARK, Tesla has the second largest position. Cathie Wood claims that her company is still purchasing more Tesla shares. Greetings, everyone, and welcome back to Savvy Tesla. One of the primary reasons for Cathie Wood's extreme optimism regarding Tesla is her belief that the company is at the forefront of autonomous vehicle technology, which she views as the next big wave of innovation in the transportation sector. Wood further asserts that Tesla is well-positioned to become the autonomous taxi platform in the United States, and that it has a considerable advantage over its rivals in terms of data collection, software development, and hardware integration. Before we continue, please make sure to hit the like button if you enjoy this kind of content. She also praised Tesla for its vision and execution in building a vertically integrated ecosystem that includes not only vehicles but also batteries, solar panels, charging stations, and software services. She believes that this will form the basis for Tesla's enormous valuation. In the future, in order to be informed about everything pertaining to Tesla, please subscribe to our channel and enable notifications. Wood's optimism in Tesla is also fueled by her belief that the company will profit from the global rush toward electric car adoption, which is being pushed by cost-cutting, regulatory incentives, and environmental concerns. According to Cathie Wood, Tesla is riding a wave that is far larger than anything we could have predicted, and the automaker has a significant chance to increase its market share in both developed and emerging markets. She also emphasized Tesla's capacity for innovation and process improvement, which helps the company cut costs and boost margins. But why is Tesla's stock still so volatile? You ask? Well, it's crucial to note that this is a topic that has confused both seasoned investors and novices alike. There are many reasons why investors still view Tesla as a profitable investment, even though the stock may not be in the best place right now, because the EV maker has consistently increased car production over the past few years. Although it is undoubtedly difficult, we think that clear communication, consistent production progress, and hitting delivery targets can all help to stabilize Tesla's stock. The automaker has produced millions of electric vehicles, reaching a milestone that the majority of its rivals can only dare to dream of.